Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we dive into Amazon's earnings, SPY's recent movements, the biosector, and more.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello? 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies going in raw.
Featuring Dan, Deity Dips,
And Hugh, honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, May the 1st, and we're recording this on Friday at around noon. And SPY, this week has been a crazy one for it. On Wednesday, we were getting back to the lows in the 414s. Thursday, we popped up almost all the way to 430. Crazy run that day. Almost like 3.5%, 4% on SPY, and now it's back down to 419, under 420. What do you think about these moves? I mean, have we seen moves like this big and not really in a certain direction in forever?
No, we literally haven't. It's kind of wild because SPY will pop like $3 in like one candle, which is just nuts and like something that like we don't really see. And it's either like you're chopping or you're head faking. And the thing is that like the head fakes are huge. So typically what I'm noticing with traders, because we do love volatility. However, that being said, it's one of those things where it's like when you're right, you're cutting for like a 20% gain when it could be 200%. And when you're wrong, it's like you're down like 60% in seconds.
Yes, I like having a crazy day at work. I like some things happening, but sometimes I don't need everything to happen.
Yeah. So yeah, exactly. And so that's kind of like what I'm noticing. And so I think that it's a really good time to reiterate, if you're not right pretty soon, like pretty close off the bat, just stop out. Because realistically, if let's just say that you take, just for the sake of numbers, let's just say that you take a $1,000 position in a contract or something. Okay. And if you get stopped out for, let's just call it a $50 loss 3 times. Okay. That racks up to $150 loss. However, when you actually have a runner, if you hold that runner and you maybe cut half of the $1,000 at 20%, and then you get stopped out of the rest at either, break even or 20%, or let's just say that it goes really well and you take it out for maybe, let's just call it 60 or 70%. Even though your win rate is only 25%, that big runner is going to more than take care of those 3 losses. And so that's the type of thing inside this market that's really important because although that doesn't sound sexy and it's not like, oh man, like that sounds great, the alternative, which is what we just talked about, is, you're right on something, you take the 20% gains because everything's been going crappy. And then when you're wrong on something, you just keep averaging down because, you're saying like, oh my God, SPY's up 2%. Like it has to go down, like there has to be a dip. On Thursday, I'll look real quick before I open up my mouth. But on Thursday, on the 5-minute chart, there was not one red candle from noon until 1:10, and the difference was 1.5%. Like, you'd get smoked on your options in an hour. Not one red candle in the 5-minute chart. And I mean, if you really want to take it from really 10:35 to really like 2:40, there's like 4 red candles, and the difference is $10 a share on SPY. You will get slaughtered. So if you're not right, have that stop loss super close and get stopped out. Even if the move ends up being right, that's okay. Because the thing is that if you're not right, you're going to get smoked.
This is the market to reserve capital.
100%.
I mean, even just make sure you're playing safe.
100%. Until we get some real direction in the market and overall, like, some lower volatility. Listen, I'm all for we all love volatility. And when there's nothing going on, we're like, God, I wish this shit would fucking move. However, when it finally gets here and the pendulum swings from no volatility to super volatility, that is truly when you lose your account. Because the low volatility times, you're just not doing anything. So you're like, damn, like, I wish I was making money right now. The high volatility times are when you lose your account.
Yeah, you're totally right, because in the low volatility ones, it just seems like it's slow chop, like break it down, break it down, break it down. You finally can be like, okay, fuck it, I'm stopping. For the real volatile market, you always see those opportunities, and that's when the FOMO really hits and people really do blow up. So I think you're right on that one.
Yeah, and that's the thing, it's literally like the gambler's vice. Like you want to be at the casino, then you finally get to the casino and you lose all your money. You're like, well, fuck, like, I wish I just didn't come to the casino.
The only way to make your money back is the exact same way you lost it all.
Yeah. And so I think that that's one thing to really keep in mind, is that even if you have a strategy, one of the things is that if it's not working quickly, and especially for the day traders, especially for like the large cap option guys, like I said, we're seeing a $3 move in SPY on like a minute candle, or the 5-minute candle. Like, you'll lose 50-60% of your contract, even if you take, even if you're taking like I had SPY puts on Thursday that I was scaling into, and they went from down like 2% to down 44% inside that 12 to 1 o'clock hour. And so either have a plan to where, like I said, like, scale in super small, and just kind of add here, add there, and wait for that conviction and have a plan. Or if you're just a day trader, it's one of those things where if it's not working, maybe just get out. Like, even like if you just consistently take like small losses, that's okay. Because the other thing that you have to think about, and because I know a lot of people love the 0 days, because who wouldn't? Max risk, max reward. The issue with that, though, is that, of course, there's time decay. So if you don't just look at it as, I'm taking another loss, because realistically, even if you're right on the move, you're going to save yourself some of that decay by waiting for confirmation of that move. You know what I mean? So it's not just like the $50 loss that you lose by getting stopped out, but also if you have that $1,000 position and you have maybe a day or two left, every hour that position's going to be reduced for absolutely nothing. So it's just something that I would keep in mind.
Yeah, and it seems like, after Thursday, I was thinking, okay, maybe that was the end of the dip, even though we talked about potential 385, but that 385 looks more and more in play as Friday plays out. Yeah,
and speaking on that, today's Friday, market's down, as we're recording this, market's down about 2.11%. Who knows how the rest of the day goes? As you guys listen to this, you'll obviously know. But Dan and I are recording this now. I feel as though even if we bounce into Friday's close, that 2 of the next 3 days will be pretty ugly. We have FOMC on Wednesday, and there's a lot of speculation out there that it's baked in. And to me personally, I felt the first one was baked in. This one, I don't necessarily feel it's baked in. And the reason I say that is because so much has changed since March. Stocks have been obliterated continue to be obliterated inside the last month. So I'll be really interested to see what happens And of course, so consumer spending came out today, as we're recording this Friday, and we're actually spending more than expected, which typically doesn't point to a recession, because typically during a recession, people have less free money to spend. So that's going to be another interesting thing that like typically we don't really pay attention to. Typically we really don't care, like what people, how much people are spending. But in this instance, that's probably going to be something that they're looking at when they're going to talk about it. And they might potentially say like, okay, we can continue to tighten, the Fed continue to tighten because there is no signs of recession, even though GDP did technically digress 2 quarters in a row. So I think it'll be really interesting. Like one of the things that we hear a lot is that uncertainty in the market is just as bad news. And so I think that right now that's kind of one of the things that we're seeing. Another thing that plays into that part is that let's take Apple earnings. Apple earnings had a beat and they did a buyback. Now, yes, the buyback was pretty much no news. Sure. However, I don't care who you are. If a company does $1.5 billion better than expected, they should be up a little bit. And I think at one point yesterday, Apple was down 4% after hours after being up 2%. So it kind of feels like how we talked about on the last episode or the episode before that, when we had spoke about how the market's really just been held up by a few of these big tech names. And now it really feels like they're just taking one by one out to the back of the farm and shooting them in the back of the head. And Apple, isn't that example. However, like I just said, they beat earnings. Like the market was Facebook, when Facebook reported earnings, they weren't stellar earnings, but it felt like the market was looking for something to rally on. Now Apple beats and they get smoked. The market's down 2% now. Amazon down 10%.
Yeah, things don't just go down more. They don't go up as much either. I mean, everything's tougher in the shitty markets.
Exactly. So it feels like they truly want to kill the market a little bit and bring some max pain. I mean, like I just peeked at my parents' Roth the other day, and it's like, you're starting to see it in like Microsoft, like you're starting to see it in your Amazon, like you're starting to see some of those 401k names or like some of those names that held up the market. You're really starting to see them start to slip. And I'm not even talking about like you want to talk about like Roku. I mean, Roku is below 100 and is now trading at 97. So it's actually having a pretty good day now. But I mean, at one point on Thursday, it was down 15% after hours after reporting. But I mean, like you take CoinStock. I mean, CoinStock, just every day that I look at it, it's down a few percentage points. I mean, today 2.5%, but that's I guess that's to be expected. Inside the past 6 months, smoked. Even inside the past month, since the Fed meeting, it's literally been cut in half. Coin. It was trading at 202 and it's now trading at 119. And that's one of those things, like I said, that like we're kind of seeing across the board. And so I think that there's too much uncertainty right now that I think that the market probably takes a beating into FOMC. After the fact, I'm not going to speculate on what I think happens at FOMC because again, I think there's too many considerations right now. But the market, like I said, I really think that 400, 385 can come quicker than we think. I think really 400 can come by June. I wouldn't be shocked.
All right, and before we go into Amazon earnings, my fucking video recording was fucked up. I didn't start it for like the first 7 minutes, and then I started it, and the fucking videos were all over the place. So good luck with that one, Vinny. Enjoy. All right. Well, speaking of stocks that are going down, you did just mention it. Amazon's earning came out and it dropped a lot, down to 2,500. You do have the stock split coming up soon, in a month or two. What do you think this means for it? Is this, something? Is there guidance in the ER that says potentially, maybe it's not a good time to start scaling in or keep scaling in or whatever someone's plans with that? Like, I remember whenever I told you I was starting to scale into Amazon at like 3,000, I told you I bought puts for them too. Well, those are finally fucking really paying off.
Yeah, I bet. Yeah. I mean, it's at 2,500 right now. So one of the things that I really think played that yearly chart is ugly on Amazon. One of the things that I really think played a pretty big part inside the Amazon terrible earnings. I mean, I'm looking at it and it was like net changing cash, operating income got smoked, cost of revenue up. Some of those important things, even though the revenue was up, some of those important things, really took a beating. Like I said, operating income. One of those reasons is actually because of Rivian. So if we remember in, I think it was December, Amazon had a knockout quarter, and that was because Rivian was trading at like $90 a share, and that's because they had that Rivian stake, and obviously that was doing really good. Now, since then, let me pull it up real fast. Since December, Rivian has sold off from basically cutting a third from last time. It was trading at, let's just call it like let's just call it like it was trading at like 120. It did hit 170, but let's just say that it was trading at like 120. It's now trading at 30. So that 1.3 billion, let's just say that went up to, I don't know what they invested in, but let's just say that it went up to 6 billion. Well, now, they got to report that loss. That 6 billion is back down to, 1.3 or whatever it was. So that's where a lot of that comes from. And again, like we're talking billions. So we just talked about, Apple, and I said any company that beats expectations by 1.3 billion, deserves to be up a little bit. Same thing, but flip side. A few $1 billion loss. Like honestly, if Amazon missed on revenue, oh man, I mean, they truly would have been, but I mean, they'd probably be down 20-25% because again, Rivian's down huge. The supply chain errors with Amazon. We're all talking like billions of dollars, and that's the thing about too big to fail is that at some point you become a juggernaut. But the issue is that when you're a juggernaut, the issue with that is that when you're a juggernaut, you're so big and you're talking billions of dollars in every department that it only takes the stars to align one time to really smoke you. And that's why it's like everybody kind of expected Apple to beat yesterday. And of course they did. And everybody expected a $90 billion buyback. Let me say that again. A $90 billion buyback, and Apple went red.
That's 2 Twitters.
Yeah, 2 Twitters. And they're buying it back. Like that's literally going to push the stock up in it of itself. And the market doesn't care. So that's why, it's just kind of like when I saw that yesterday, Apple was up 2%. SPY was still red from close. I was like, oh man, we're in for it. I really don't know like what else can kind of save the market right now. Because we're just inside these massive downward trends. And the same thing, like I just said, look at Amazon's 1 year daily chart. I mean, this thing is freaking ugly. It just hit a new 52-week low. And last support was like 2,700. So now we're trading under it. We're trading underneath all the moving averages. The 10-day moving average is the 10-day moving average is 2,800. Like, and this candle that's shaping up on this Friday, on this daily, on this weekly, and it's the end of the month. I mean, that's an ugly candle across the board for Amazon. Like I said, you got the daily closing today,
Amazon shares before the split.
I definitely think so. As it gets close, I still think that we need. So that was the next thing I was going to say is that when SPY gets close to that 400, if Amazon gets to that 2,200 level, 100%, I think it's no brainer because the thing is that again is that when we look at Amazon, Rivian had a lot to do with that net income loss. And that's only going to happen. Well, hopefully that only happens this quarter. Like it won't be nowhere near that big, even if Rivian continues to tank, because again, their investment went from, let's just call it 7 billion back down to 1.3 billion, which I'm just throwing out the numbers because I know that they originally invested the 1.3. So when it goes up, 1.3 to 6, they get to put that on their balance sheet. But now that's back down, now they got to handle that, for their earnings. But again, even if Rivian goes to zero, it'll only affect them by another 1.3 billion. So that's like one of those things where it's like, okay, market's getting smoked. They got, it was a bad situation because Rivian got smoked and they're invested in them, and it sucks. However, it's okay because it's only a temporary thing, fundamentally from a business standpoint, Amazon's still crushing it. Revenue's still increasing, and they'll be okay.
All right. And what do you think, if anything, do you think this has any effect on the split coming up? I mean, it's still obvious. It just seems like a really weird time for Amazon to finally become like bearish, have like bad earnings, and didn't the split get moved back as well?
Did it?
I don't know. Now, yeah, it wasn't. It was May 27th. Now it's June 3rd. Oh, I think I was thinking of the May 27th was the day that the shareholders of record.
Gotcha.
Okay.
Gotcha.
Yeah, so May 27th is the last day, then the June 3rd is okay. Yeah.
Got it. Yeah. So I mean, realistically, we have we have
a month.
Yeah, we have a month, and so I think that kind of goes in line with what we talked about with SPY, like going near 400. That's when it's like Amazon near there. I totally love for like a long term investment, especially if it's trading at let's just call it like 2,200. I mean, last time it was at 2,200 was last time it was at 2,200
June 2020.
Yeah, June 2020.
Oh, holy shit! Look at me.
Yeah,
I think it hit 1,800 during the crash, COVID crash.
Yeah, 1,600. Yeah, I mean you're right there. Yeah, you're right there. And again, I mean this chart looks ugly, like godforsaken ugly. I mean it sliced through the 200-day on the 3-year, which is typically the bounce spot. Like that's like on the 3 to 5 year, the 200-day is almost always the bounce spot. And I mean it sliced through there by by a good bit. And so if it doesn't close by there, which, they have about 3 hours, since the time that we're recording there. I mean, if it closes there, fine. You can see it bounce. But I mean, if it closes where it's at right now at that 2,500 handle, I mean, again, ugly across the board, the daily, the weekly, the monthly, now the 3-year weekly. I mean, that is freaking ugly through the 200-day moving average. Now it's one of those things where, now all the moving averages for the last, I'm looking at the 3-year, like I said, for the last 3 years, the moving averages have pointed up. Now, all the moving averages are literally going to be a nosedive. And so that's going to take a lot to shift. And I don't know, like that's really bad. And so maybe the split is the thing for them, that changes the course, but this is ugly. But yeah, so moral of the story, 2,200 is probably where I'd be looking. Honestly, even 2,200, 2,250, even like 20, 23, 23, like right around there is probably where I'd be interested as well. But yeah, again, scale and small, this thing can go lower. Right now I really don't see a bounce spot. I'm using the bounce spot as based on like a catalyst. So that's just something to keep in mind. Like right now, like I guess we could go to I'll go to a 10-year chart, 10-year weekly. And again, same thing, just slice through the slice through the 200-day moving average. If I go to the 20-year, still through the moving average. So if I go to the 20-year, what if I go to the 20-year month? Okay. So the 20-year month is the only thing where there's a moving average below it. And so right now it's testing the 50-day on the 20-year monthly chart. And literally if it goes any lower, it'll close beneath it. because the 50-day is 25.16. So right now it'll technically close below it. And then the next moving average below that is the 200-day, like I said, on the 20-year monthly, and that's all the way down at 1,100.
Okay, well, our last thing that we wanted to talk about, your guy Bill Hwang, found himself in a bit of a pickle. First of all, do you kind of want to tell the average listener who this fella is before just saying some random man got arrested?
Yeah, so if you look up Bill Hwang, which I haven't pulled up on my screen,
there's an H as well. The H is silent.
Yeah, the H is silent. It's Hwang. So if you look up Bill Hwang on I guess Hwang. Sorry, I don't.
I trusted you whenever you said it, but then again, I trusted Nate's last name was McCod and it's Micho. So yeah. Hey,
So I'm sorry, Bill, if I'm saying that wrong.
I don't think he can listen.
Yeah, probably. Probably not. Yeah, that's probably a good point. So it pulls up 4 pictures about him, and then his about says Bill Hwang is Hwang. I'm going to say Hwang.
I feel like
an
that's
American.
wrong.
You feel like it's wrong? I don't know. Oh God, I hate these things because
Well,
I feel like I'm offending him. I don't mean to offend you, Bill.
Listen.
I promise.
Bill Hwang pronunciation. So, how do you pronounce the name Hwang? Here we go. I'm gonna learn. Of course, I have my fucking. Oh no, I think we may actually be really off.
Oh really?
One sec. Let me unmute YouTube. Here we go, boys. We're gonna find this out as a team. Hwang.
Hwang.
Okay, so.
Sorry, Bill.
Yeah, Bill Hwang, maybe. I feel like it's got to be one of the 3, so we'll take our odds there.
Wow.
Okay, well, Bill Hwang, he was arrested.
Wow. Yeah.
Doing a little trading.
Yeah, I am actually. Sorry. So yeah, I got spy puts. They're up a good little buck today.
How'd you play those? I know you mentioned buying them. When did you buy them? Let the people know.
So I bought them off open yesterday, and then I got stopped out for a small win. I'm talking about Thursday, guys. And then I got stopped out, and then we were up like 1.5% or something, and I started adding in, and that was like noon. And then it went against me like another percent. But the way that I'd done it is I was in super small, like I was in like like let's just say my average position size is, I'll just make up a number, $20,000. Then what I was doing, I was scaling in $400, and then another $400, and then another $400, and another $400. Into earnings, knowing that FOMC was next week, knowing that, even at that, let's just call it like $1,200, that I would get up to, an additional like $1,200, maybe even more, leading into FOMC. So it was either Apple was going to shit the bed and the market gets smoked, and I would just have my position, or Apple would have done well. And today, if the market was up another 2%, then I would have doubled my position. So that's where I played it. I'm still holding them. As we're speaking, the SPY's down 2.3%, testing yesterday's lows. And also, that forsaken like 415 area is coming up. So yeah, that's pretty much the way I played it. I plan to hold them into next week because, like I said, I think we're gonna get carnage, and then we'll see. So that's the way that I handle it. But talking about Bill,
yeah, back to
Bill. Yeah, sorry, Bill. Don't want to keep you waiting. I know you don't have a lot of time on your hands, but so it brings up 4 pictures of him, and then it brings up 4 pictures of him. And then, and it says on his about, Bill Hwang. Sorry, how do you say it?
We'll just say Bill.
Bill. Okay, yeah. Bill, last name, is an American New York-based investor on Wall Street. The Wall Street Journal reported that, last name, lost US $20 billion over the course of 10 days in late March 2021, imposing large losses on his bankers, Nomura and Credit Suisse. which is really interesting. Which is really interesting that they just kind of throw him underneath the bus like that. I don't know. I wouldn't like that. He's actually a New Jersey resident as well, or I don't know if he's going to be a resident anymore. But however, so that happened about a year ago. March 2021. So about a year ago. And then he gets arrested out of nowhere. So for anybody that doesn't know, he lost $20 billion because he got margin called, and he was basically way over leveraged. And
happens, man.
Yeah, I'll read it directly from the Financial Times. Actually, they want me to subscribe, so I won't do that. But basically, he had like 30 billion, and he had a trail of insider trading. Trading accusations and wire fraud charges against him when he was a trader. Then he rebuilt himself and he opened up his fund, and then basically he just blew up. Like that was like the last thing that like everyone had heard of him, was that he just kind of blew up. And basically this is what he did, is that the alleged scheme bloated that his fund from a $1.5 billion firm to a $35 billion firm in one single year. And he had manipulated the market for its holdings from 10 to 60 to 160 billion. So 16x, according to the indictment filed in Manhattan court. Basically, he lied and finessed all the banks, over leveraged, and then Viacom, VAIC, I forget the ticker. If any of you guys remember that one, I mean, it had like a bad earnings or bad news, and it barely went down. And I mean, he liquidated and he dumped billions of shares, and it fucked a lot of people because, again, it just comes down to simple supply and demand. So basically, what they're alleging is that he just finessed the banks. He over leveraged like 16, 20 times. And again, it's not like we're talking like, this would never be good. However, it's not like we're just talking about like 50 million, which is still a fuck ton of money. We're talking about $100 billion that he finessed. And so, and then not only did he just not like finesse it, he went really heavy on a few stocks. And so then on top of that, not only are they criminal charges, but there's a parallel civil suit claiming market manipulation. And I mean, it's just really wild what they're claiming this guy did.
A slap on the wrist and like a 2-week stay in a white collar prison.
Yeah, see, like that's the thing, is that even though he did all this, like apparently he still has like $9 billion in cash. Like him personally only lost like $5 billion.
Yeah, must be fucking
just
nice.
Wild.
Yeah. All right. Well, we'll kind of close this out with a Elon update on the Tesla thing. Can you update us on the Tesla price and how close we are getting to Elon getting margin called, similar to Hwang.
So we're currently at 896. Today, Friday, some news came out that that he had sold shares and that he was going to be done selling for the time being. And so the Tesla popped pretty hard on that. It popped over 900 actually to 935, and since then it's just kind of sold off back underneath 900. But I tweeted on Thursday, it looks like Elon's selling. I mean, that dude is relentless. I don't know who his broker is, but they just sell into the bid. They don't give a fuck. Like, they literally don't give a fuck. You can see it in the tape. They're just selling into that bid, which is interesting. However, it's really I don't even know how to say this other than like, it's dangerous because even now, Tesla sold off $35 since 9:40 a.m. And from the chart perspective, I mean, and the other thing that a few people brought up was that Kathy owns a fuck ton of Tesla. Kathy Woods, of course, I'm talking about. And the issue with that is that if she gets called on some of her other stocks like TDoc, which she's getting obliterated in, or some of her like Palantir, some of her other stuff, she's going to have to sell some Tesla to cover that. And so again, now you have like another seller in Tesla. So I don't know. It'll be really interesting. Not much has changed since Wednesday's episode. However, it doesn't look great. In fact, I really would put like the chances of this deal not going through probably get higher as the market gets more smoked. If it does get more smoked. If the market recovers and Tesla's back over like 1,100, you can make an argument. And of course, Elon's super smart, so like he probably has a backup plan. However, if he doesn't and he's just kind of, hoping that they take his collateral, if we start slipping into like the 700s, like 790, 780, that's when it's like, okay, brother, like we're getting real close here to getting margin called.
All right, well, we'll kind of end this with Elon's tweets. I mean, he was sprouting them off. I mean, I guess no one can tell him no
I like
anymore.
the Coca-Cola
Yeah,
one.
he said he's going to put cocaine back in Coca-Cola, so everyone be looking forward to that. I'll probably buy that company as well. I hope everyone had a great weekend and has a fantastic trading week, and we'll see you next time.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.